Market Michael here. Now, I wanted to make some updates to the situation. So, the situation into the after hours is that we have some buying pressure into the after hours. But let's just see if that holds off into the morning. I highly suspect that, we're going to come down off these ridiculous, insanely high buying pressures and come back to reality here. Um, why do I think that? Well, we're going to open up at resistance, and also the MACD on a daily chart, folks, does not look hot. We are negative, 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 and this is going to change. This is going to negative, meaning the two MACD lines crossed. So we've already crossed that negative MACD line, folks. Now it's just getting stronger. It's gonna get stronger. You see here, that's a transition. Both these are transitions. Two transitions, two wrongs don't make a right. So I'm gonna give you reasons for being bullish and reasons for being bearish. So let's start with the bulls first because most people have money in the market and you know, most people like casinos. So here we go. Reasons. We got the CCI down so low that it's so low that it most likely will come up, and come up at some point it will. RSI is coming up as well. Now we have two green, we got green buying today, so that's a bullish sign. And we got a transition candle, so that's something to look for. If tomorrow we get another big green candle, that really indicates that a reversal is happening. And we would need a heavy reversal indeed. Look at here. We instantly had to go to bright green. A lot of strength. Look at here. So, you know, on this candle, so tomorrow, if it doesn't have explosive buying action, then we're going to remain in this negative MACD level, which is critical to get lower lows. So pretty much that's really it. There's not really much going for the bulls. For the bears, there's more kind of mystic language going on. So we got this crossover on that negative MACD. You know, we got we failed this 68%. We got parabolic star balls on the top. We got a underlying negative MACD trend below, MACD trend, tricks trend below that medium point. We also have pressure from that 10-year bond yields going up. But right now, we do have that yield inversion. It is gapping up a little bit more. We're getting a little bit larger. We're at 0.52. So 0.52, we're going to go to approximately 0.56 to 0.58 and then come back down for a continuation. So that's pretty much it. I'm looking for a continuation of this negative trend. Now, I watched a video and it was brought to my attention, that you need to look at the higher time frame. Not only you should look at the higher time frame, that's going to give you an idea of what the bigger picture is. So I try and show you as much time frames as I can, guys. But basically, in a sense, I don't even have to look at that because, look, I could tell you the downward pressure of this week is negative. So this is what we're coming from. And you could see this transition candle from this upward momentum. So, we're possibly expected to go a lot further south. And this is just a slight transition. Now, let's say today, tomorrow are absolutely stellar, and we end up gaining 300 points, then we're going to be up here. So, by the end of the weekly chart is going to show another transition, but with positive growth where we wouldn't be this dark red on the negative histo, and that would indicate a higher run up. So again, guys, we've just gotten some buying action towards the end of day. I don't know what to say. Today was a crazy day, and you know, I still do expect a continuation of this negative MACD trend for the reasons I listed, and it's going to be bad because we're already at the bottom of the barrel. So it's not going to just be a tiny tink, tink, tink. It's going to be a kapoosh, a big fucking splash to send ripples around the world. All right, with all that stuff, take it or leave it. There you go, folks. So I'm out of here. I'll see you in the morning.